Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 15th of May 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of. And the things that stand out most to me in this table is the lack of movement that we've seen overnight. Very few major moves. 1 or 2 points of interest to flag, but I would describe it as eerily quiet. Overall on the FX markets today. The Australian dollar and the New Zealand dollar both on the back foot, down by 0.18 and 0.14% respectively against their US rivals. Just have a look here at their respective weekly trends and indeed the monthly moves. So they're continuing to move lower despite the attempt by the Kiwi earlier to push back to positive levels. The Mexican peso also down against the US dollar, down by another 0.1% overnight. Dollar index largely unmoved, really, down by 0.02%. So it's very little movement there indeed. There was some movement in Asia. The dollar gaining 0.23% against the Korean won, and that again solidifying gains that we've seen the dollar make against the Korean currency across the whole of the year. If you look to the right hand side here. There's also been movement in cryptocurrencies overnight. Bitcoin adding 0.42%, but Ether having a better day, up by 3.35%. And here are the weekly gains for those two leading cryptocurrencies, both over 34%. So that's something to keep an eye on as well, while the FX markets perhaps remain a little quieter. Okay, what's the calendar events that may move the markets today? Well, it's a pretty packed calendar. It seems to be feast or famine this week as far as macro data is concerned, and we're certainly with the former today. We've already had the Westpac consumer confidence data out of Australia for the month of May. That was accompanied by wage price index data for the first quarter. A slightly disappointing read on the wage data, though it was still growing. Retail sales, industrial production, and the National Bureau of Statistics press conference have all happened in China this morning, with that data and comment coming at 2 a.m. GMT this morning. We have to come at 0600 GMT or 7 o'clock London time. Gross domestic product data for the first quarter out of Germany, both year on year and quarter over quarter. Once again, these are preliminary reads, but still a good chance to get a handle on what's been going on in the German economy since the turn of the year. And at the same time, we'll see similar data out of the wider Eurozone, in as much as we get Q1 GDP, both quarter on quarter and year on year data as well. A pretty big pause then until 12:30 GMT when we cross over the Atlantic for the release of retail sales for the month of April, both inclusive and exclusive of autos, and this data released on a month-on-month basis. At the same time, over in Canada, we get a look at inflation through the release of the Consumer Price Index data for April and the Bank of Canada's own CPI core index data as well. 13:15 sees the release of US industrial production data for the month of April, and then we start a round of central banker speeches. At 13:30 the Fed's Quares kicks off. At 14:15 it's ECB's Benoit Curé, and then at 16:30 ECB's Peter Priet will be speaking as well. And then a more significant pause until 23:50 this evening, when we get the weekly foreign bond investment and foreign investment in Japanese stocks data for the week of May the 10th. Okay then, breaking news and comment that's caught my eye. And first of all, US and Asian equity indices have bounced back as trade war fears appear to recede. President Trump spoke overnight about an extraordinary relationship with his Chinese counterpart, President Xi of China, and also talked up US growth prospects, and the markets took that to heart and softened their negativity, I think it's fair to say. Meanwhile, Brazil's government is to ask its parliament for an additional 248 billion reals, saying that the country faces a fiscal abyss and that it is likely to cut its GDP forecast for 2019 to just 2% from the current 2.2%. And that GDP data is likely to be updated on the 22nd of May, I understand. So could the honeymoon period, or the honeymoon period, I should say, for the new President Bolsonaro there be coming to a premature close? We shall wait and see. Meanwhile, two of China's leading tech companies, Alibaba and Tencent, are due to report earnings today, and what will be another test of sentiment towards the tech sector. Obviously, we saw Uber float and then sell off in last week's turmoil. It'll be very interesting to see if Alibaba and Tencent can please the market and what the reaction to the market will be to their numbers. Back in the UK, Theresa May is to put her Brexit plan to Parliament for a fourth time, with a vote planned for early next month. George Bernard Shaw called second marriage the triumph of hope over experience, and this would certainly seem to fit that billing. So good luck, Mrs May. Be interesting to see if Parliament's changed its mind at all, as and when that comes to a vote once more. Okay, food for thought, something to take away with you into the trading day and beyond, and why not think about this? And the question I'd like to ask this morning is, how much geopolitical risk is in the markets right now? Now, we've obviously seen quite a bit of geopolitics in the news headlines recently: trade, Gulf tensions, North Korea walking away from summits with the US and cozying up to Russia. So there's plenty of stuff going on. But how much of that's in the market? Well, BlackRock have produced what they call a geopolitical risk dashboard that tracks sentiment towards these items. A series of smaller charts here showing individual items, and then a global index here on the right hand side. Interestingly, this is data as of the end of last week. European fragmentation is seen as more of a risk at that time anyway than global trade tensions. That may have ticked up by the end of this week, of course. Gulf tensions ticking down at the moment, although of course we have had those incidences of sabotage to Saudi Arabian and Emirati oil facilities. Tensions in Southeast Asia here also ticking low. Generally, most geopolitical risk, surprisingly, seems to be heading lower, and you can see that clearly on the longer term chart. US-China trade tensions late last year saw a sharp peak. We haven't yet scaled back to those heights. As I say, we may see that pick up again by the end of this week when the data is recalculated. But for the moment, the trend is lower. So perhaps counterintuitively, it looks like geopolitical risk is waning in the market, though still well elevated above levels, for instance, that we saw around President Trump's US election in 2016. Okay, it's risk warning time. Please do take a moment to read this risk warning, because trading CFDs and foreign exchange on margin can be a risky business. If you're unsure about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time, please, to read this risk warning thoroughly. Thank you for watching today.